Policymakers are concerned about China's demographic change, but in the medium term, the labor force remains enough, and new economic opportunities are emerging in new subsectors. China boasts the world's largest population, but its population growth has slowed in recent years. China's population fell for the first time in 60 years in 2022, which could signal the start of a long-term decline, hurting the country's economy and business climate. Key concerns include the long-term economic consequences of an aging population and a shrinking labor force. So, how much of China's population has declined? For the first time in 6 decades, China's population has dropped. According to the National Bureau of Statistics known as NBS, the entire population of mainland China will be 1.4118 billion in 2022, down from 1.4126 billion the previous year, a decrease of 850,000 people. According to UN demographic modeling, China's population could shrink to 1.313 billion by 2050 and below 800 million by 2100. The demographic shift is the result of a declining birth rate combined with a rapidly aging population. The national birth rate fell to a record low of 6.77 births per 1,000 people in 2022, down from 7.52 in 2021. Meanwhile, towards the end of 2022, China had 280.04 million people over the age of 60, up from 267.36 million in 2021. As a result of these developments, China's working-age population, those aged 16 to 59, fell by 0.5% from 62.5% in 2021 to 875.56 million at the end of 2022. So what is causing China's population to decline? One of the primary causes of China's population decline is the country's one-child policy, which was applied severely until 2015. Initially intended to limit population growth, the program resulted in fewer births and a considerable imbalance in gender ratios. As a result, the number of women of reproductive age has decreased. And the reduced number of this cohort, along with increased child-rearing expenditures, is likely to persist and accelerate in the following decade. Another factor is the growing aging population of the country. Life expectancy in China has increased dramatically in recent decades, resulting in an increasing number of old people. This trend is likely to continue, with the population of people over the age of 65 expected to double by 2050. China's childcare policies have increasingly evolved toward pronatalism in recent years. Since 2016, Chinese couples have been allowed to have up to 2 children, while single-child parents have been allowed to have 2 children since 2013. Then, on May 31, 2021, China declared that couples in China will be permitted to have up to 3 children, that is, the so-called 3-child policy. China also announced a series of supportive measures for the 3-child policy, including tax breaks, inexpensive childcare services and education, and the implementation of childcare leave, in order to increase birth rates and rectify the country's demographic imbalance. Furthermore, local governments have begun to provide financial incentives to encourage births. Couples with 1 to 3 children in Shenzhen, for example, are eligible for subsidies totaling 19,000 renminbi, $2,800, one-time payments of 10,000 yuan and an extra 3,000 yuan per year until the kid reaches the age of 3. Will the Chinese market decline? The diminishing population may result in a smaller market with fewer customers, affecting market size directly. This could lead to a drop in demand for goods and services, thus damaging the country's economic growth. An aging society may result in lower consumer expenditure since the old are less likely to spend money than the young. This is known as the age structure effect. Meanwhile, the Chinese government has shifted the economy's focus to its domestic market through the dual circulation strategy, as well as investments in higher value-added products. More attempts are being made to expand the domestic market in addition to international consumption. China's per capita income is approximately 6 times that of the United States. While China is not assured to eventually achieve GDP per capita levels comparable to those of the United States, there is still tremendous potential for economic activity, household wealth, and domestic consumption levels to rise.